Let's start with natural gas prices here. European natural gas prices surging to a record today. The American market relatively insulated, but you're still seeing those prices hit as high as the 5 level, essentially. Talk to us a little bit about what that means for your industry.
Yeah, so natural gas prices have been extreme, specifically in Europe, just due to the issues that are happening with Russia and the talks of pulling Russian exports off of the market. That's about 20 BCF a day. About 5% of global gas production would be sanctioned. But what's really powerful is what you mentioned. The United States has been insulated from this type of price shock. We've seen natural gas prices in Europe, the TTF, is traded up from over to about $75 per MCF, and during that same period of time, natural gas prices here in the United States have only moved up about 15 cents. Why is that? Because the power of the American oil and gas industry. We are the powerhouse in the world, and we have insulated Americans from significant supply. Sorry, let me back that one up. And so we've seen. So what you've seen is the American oil and gas industry laying down a blanket as it relates to natural gas prices, protecting Americans from the extreme price shocks caused from geopolitical events around the world.
So what does that mean for your production in particular? There's calls from around the world that we need more supply on the market. Are you willing to ramp up your production?
Well, certainly there's definitely a demand for energy that's produced responsibly, and there's no better place in the world to get your energy than the United States. We produce our energy cleaner and more responsibly than anywhere else in the world, and certainly the world is moving towards, there's a call for clean energy. Natural gas and the producers are here to step up and meet that demand. But we can only do so much, and right now in the United States, in the Marcellus, we are out of pipeline infrastructure. So for us to do more, for us to step up and serve the American people, for us to serve the world, we need simply more pipeline infrastructure and more LNG facilities to connect our low-cost, responsibly produced supply to the world.
Well, you mentioned stepping up for the American people in particular. That's a message that you've heard from the Biden administration. You've heard it from the Energy Secretary, of course, and of course the regulatory bodies, environmental or not, really across the country. Has the Biden administration in particular reached out to you?
So we're really excited to see the Biden's, the administration talking about energy. We have not had those conversations directly with the administration, but to see that now that they're talking about putting sanctions on Russia and Russian exports, that's them being serious about energy. You know, to be able to pull off something like that, you need to know that you've got a powerhouse of an industry ready to step up. That is the American oil and gas industry. And so certainly there's a recognition from the Biden administration that this industry can do a lot and help mitigate any impact it's going to have on the American consumer.
So what do you need from the Biden administration to ramp up production to meet that goal?
Real simple, like I said, pipeline infrastructure and LNG export facilities. You know, we need to build those pipelines faster and LNG facilities faster than we've ever done in the past. That's one thing. The other thing, though, is we need his voice. We need a very simple, send a political signal that natural gas is the energy of the future. The United States has the ability and desire to help meet world demand for clean burning natural gas.
But that includes not just pipeline infrastructure, but the export facilities as well. Are you looking to participate in other LNG projects, especially when it comes to exporting to perhaps Europe, which, as you mentioned, clearly needs it?
Yeah, as America's largest natural gas producer, looking at the biggest source of demand growth in our industry is going to be LNG exports. So EQT is having conversations with LNG exporters, and we're also having serious conversations with people around the world, whether it's Europe, whether it's Asia, looking to secure their energy, because anywhere in the world, United States, we produce the cheapest energy. It will be the most reliable, and also be the cleanest way for countries to evolve and move off of their dependence on foreign coal.
Yeah, well, let's go back to the Biden administration here, because you clearly had that message for them. They have reached out to the likes of Qatar, they've reached out to other European countries. Of course, there's this kind of international call to ramp up supply. Why haven't they reached out to your industry in particular?
Well, you see what the Biden administration have done. They're talking about looking to major oil and gas producers and seeing if they can help. And I think eventually they'll come back to talking to the largest oil and natural gas producer in the world, the United States oil and gas industry. As we've said it before, we're here to help. We just need to have support for more infrastructure and a political signal that American oil and gas is the energy of the future.
And your company in particular, EQT, is responsible for 6% of the natural gas production, I believe, in the United States, making you the largest, or the company, I should say, the largest kind of producer stateside. Let's talk about your company in particular. I really wanted to ask about the hedging that you're looking at. We're talking about prices higher and higher. Your company in particular has hedged those prices. There was no expectation that you would start to see these soaring prices. How is your strategy? I believe the specific words were turning it from defensive to large upside exposure. Can you shed a little bit of light on what that new strategy looks like?
Sure, so it's very simple. I think in the past, we had more of a defensive nature. We had a significant maturity wall that we needed to meet. But you know, we've been able to retire a significant amount of debt, and the company's future is a lot brighter, lot stronger balance sheet. And now, pairing that with what's going on in the world, the volatility that we've seen is only going to get more, we believe. And so what we're trying to do with shaping our business is really giving investors the best risk-adjusted exposure to natural gas prices. And so our hedge book will reflect that going forward in the future. And what you'll see is we'll still hedge, but we'll be using collars versus swaps, putting less floors in place and giving our investors exposure to the upside.
So how high are you expecting that upside to be? How high can prices go?
Well, I'll tell you right now, even at natural gas prices being $5, this is still the cheapest form of energy in the world. And to put this in to make this comparison real, $5 natural gas is equivalent to $30 oil. And oil prices are north of $100 today. Just shows you how cheap natural gas prices can be. And when you look back 15 years in historical natural gas prices, we're typically between $6 to $10. So yes, $5 compared to the $2 we were getting a couple of years ago may seem a lot, but when you look at the historical context we've seen over the last 15 years, you look at it comparative to energy in the form of a barrel, you realize that American natural gas is the cheapest form of energy.
Yeah, well, let's talk about the pricing here in particular, because you did actually mention that you're hedging against it, but with these kind of very strong rallies that you're seeing, essentially I think natural gas has gone vertical now, it comes with some pretty violent corrections as well. Are you anticipating that?
Well, I think that's why it's important for us to be mindful of hedging. But the way that we hedge is going to allow us to mitigate the downside risk, and we do that by putting floors on our business and being cautious of the ceilings that we're putting on our business. And so using wide collars is a way that we can do that, adding puts to our business, the way we can protect the downside and prevent and still maintain essentially unlimited exposure to the upside. But this is just the way that we're thinking about how we're doing our hedging philosophy in the future.
Well, I have one last question for you. Let's talk about cybersecurity very quickly, because in this kind of geopolitical nature where you are seeing Russia perhaps use cybersecurity as a weapon, essentially, talk to us about how you're protecting your company when it comes to that.
Well, we've got an amazing IT team at EQT, and I will tell you, we have seen the hits on our system increase significantly since this conflict began in Europe. But unfortunately for EQT, we have a very big staff that focuses on this and have safeguarded us and protected us. This is something that's incredibly important for this industry, but one of the great things about this industry is our ability to embrace technology. We have the resources in place to put the shields up, and fortunately, there's been no penetrations.
Do you have information on where the hits came from?
Russia.
It did,
yes,
and you can
right.
confirm that?
That's where these things are coming from. It's always hard to actually pinpoint exactly where these pings are coming from, but I mean, let's just look at the situation, and the biggest threat to Russia is American natural gas. So when you think about what they're going to do to preserve their power, it's shut down American oil and gas. And so they can do it through cybersecurity, they can do it through lobbying environmental groups against infrastructure projects like shutting down pipelines. All these things that weaken American oil and gas are things that strengthen Russians' energy markets and their ability to export. Now, a strong American natural gas business, we are going to be the industry that replaces Russians' energy exports. 5 million barrels a day of Russian oil, 20 BCF a day of Russian natural gas. That's coming off the market. And the United States and the American oil and gas producer is going to be a big part in making sure that these barrels don't return.